Hi everybody, I'm Dale Pinkert. Hello, Elefard and Boo. You're crazy, buddy. Hi, Patrick, Ziggy. Everybody, how are you today? Everyone doing okay? Let's finish May strong. It's the last full week in May. Memorial Day next Monday. How you doing, Arif, LaShawn? So, before I get started, I want you guys to mark your calendar for this. See this? Right here. Futures market, Jack Schwager, June 5th. I think anyone who ever takes the Series 3 exam should be required to read this book. Jack will be with us. I know I need a haircut. Okay, so getting to the markets, this is what I'm thinking and what I'm seeing. Of course, we all know Euro Pound is broken out, right? Out of that triangle we were looking at 86. I don't see any reason to fade it, which makes me think that my preferred short is going to be cable. Give me watch, you're with me on the analysis. My preferred short because of EG, although it could correct, looks pretty good as long as we keep closing over 86. So my preferred short is cable, right? So the DSI on the dollar index, I think is 6 or 4. Maybe Steve, it's going to be a traveling man, could speak to that. So if I want to fade the dollar, I want to fade the weakness, right? So that brings to mind the Aussie, that brings to mind cable. Okay, so let's take a look at cable real quick here.
The dollar DSI is at 5 actually, so you were wrong on both ones.
It's 5, buddy? Okay.
Yeah, it is.
Okay, what I would like to see, and maybe the euro could drag it up, even though I think even the euro is beginning to lose momentum. I'd like to see one more push up to 34, above 30.40. You know, clean out some of the people. There's been decent selling up here. They were very successful here. They weren't as successful here. I'd like to see them take out the bears over 30.40, 30.50. And why do I think that? Well, first of all, I think that because I'd like to see the shorts taken out before we have a failure. Maybe you have a little breakout here. And what also makes me think it is the research on FA. Here's Nick's harmonic on cable up here. AB equals CD at 30.27, so we've already done it. It's possible it's already in. And besides that, Rega. And Nick's looking for a pullback towards 26 in that harmonic pattern. So Rega looks like looks more like 30.60-ish for a 5 and then a down. So that's what I'd be looking for in the pound. Everyone with me? I just want to see shorts shaken out one more time. So that brings me to the guppy. You know, I've been negative to the guppy for a while. Said sell it last week up around 47, and then we had the crash in the market. Said, you know, maybe we'd have a better opportunity next week. To me, it looks like another flag. You know, big break, flag, big break, flag. Corrective in time, more than price. I'm looking for another breakdown. Perhaps if we do get that one more push up in the guppy, that in the pound, excuse me, we might have selling opportunities back around 45.5, or maybe this moving average 45.70, 45.80. I would take it there, risking the highs over here, over 47, looking for 42. So it's still one of the weakest yen crosses. So here's a 42.17 on the 4 hours, your 200, 42.21. And here's your daily. So I'm laying for cable and guppy shorts here. This takes it to 41. But maybe we get that one more push up there. Everyone with me on what I'm stalking today? Yeah, it could be you. It could be V. Yeah. You're looking for Rona at 137. Okay. Do you like the look of Aussie? Slightly above the bear trend. Well, I like the look of Aussie yen more because we're also pretty close to some important resistance. But I really don't know what to do with the commodity currencies. I do still favor a high coming in Euro Aussie. I think it's down here somewhere. Whoops. Yeah, the Euro Aussie.
You passed it, Dale. Yeah.
Got it, buddy.
Good morning, mate.
How are you, buddy? You
Good.
packing up? You packing up your suitcase?
Actually, I'm going to start doing that, you know, after the webinar, probably.
Yeah. So here we are. We haven't taken out the spike high yet in Euro Aussie. There may be a stop hunt here, but this is pretty glaring divergence on this spike here. They may want the stops, but I think the big money on the long side for now has been made. I'm still looking at least for a short-term correction. Initially here, 49, but it could turn out to be deeper. But cable's the preferred short, so maybe I missed pound Aussie. Last week you guys were shorting it up here. Great short. Probably still with it. I'm almost tempted to buy it for another push up. So those are my views today. Enough ideas for you guys? That's what I'm seeing here today. So really paying attention to cable based upon the DSI, based upon Euro Pound being in favor of long Euros. And would love the opportunity for a better shorting opportunity up here around 45.75 in cable, in guppy. Okay. Any questions or any shares? You guys have anything you want to show me? So I think we've gotten into kind of a, and it's okay to ask questions about our opinions, but you know, yours are important too. So I'm also curious what the community is thinking coming into the last week of May. Sure hard to fade the dollar here and sure hard to short the dollar here. Gold to me, I think there's some decent risk reward, especially if we have a dollar comeback. Or maybe a move to 1240. I bet that's where we have Steve Volge's dotted lines coming in around 1240. So this looks like a flagpole, bear flag, and we're getting a little bit of a bear flag here. So you shorted here against 1265, risk 8 or possibly 17. And I actually know some people that are looking for new lows, take these lows out into the June time frame. Because now the Fed may move, right? Because markets have stabilized after the, what can we call it? The special prosecutor sell-off in S&Ps. That's what we could call it. And if Steve's going to be right and it's more than a one-day wonder, that break in the market, we have to start soon heading back down.
Yeah, that's what I want to say, Dale. I mean, maximum until tomorrow. If there is to be another leg lower, we should start seeing it evolve. Otherwise, you know, it's obviously another fake sell-off fake.
Yeah.
Not fake actually, but you know how it is. I mean, it's another sell-off that they actually managed to drown in in liquidity. And
Do you believe there's a plunge protection team?
oh yeah, there's no question about it.
Okay.
In a big part, the economy is currently being supported by the prices of financial assets actually. So it's a virtuous circle, which you know very well that when things start unraveling, it becomes the exact opposite, a vicious circle. And that's the problem when you have that kind of interventions in a market, that it all works nicely, while spirits are high and everything seems to be under control. But then when you get a real tumble, it's very hard to backstop.
And the Nikkei has bounced, held this 50 and it's bounced right back to the breakout failure, which we had here. So a lot of these different bourses look like that all these rallies could stall here. That's the Nikkei. Let's look at the DAX.
Yes, yes. I mean, technically speaking, there is a good likelihood that we're going to have at least one leg lower from around current levels.
The UK market seems to have the strongest looking pattern, the FTSE. I wonder if there's any implications of that. FTSE making a new high. Does it bode for a stronger cable, or would they prefer to have a weaker cable? Or
first of all, is some money coming back, after May. Asked for elections, etc. Because in essence, with the market pricing in a landslide victory for her party, that automatically builds one of the main investing pillars that anybody's looking for, which is political stability. Now, on the other hand, having the FTSE strengthening, while at the same time we have the pound strengthening, is a little bit, not that it's something that we haven't seen before, but it's a little bit of an oxymoron. I mean, it's something that usually you don't see happening, but because the pound is not strengthening only against the US dollar, it's actually strengthening against, it has been strengthening during the past couple of months against most currencies. But I also see there a broken wedge that we might retest. So yes, it looks very strong. But on the other hand, I would be very careful at current levels. I can show you the chart later. But since we talked about the cable and you talked about it as well, I need to say here that if you have a look at all the USD pairs today, you'll see that probably the cable is the only one that's on the wrong side of the river, in quotes, in the sense that the vast majority of currencies that I track against the dollar have made a new high against Friday's high, I mean. Yes. While on the other hand, the cable is completely subdued. It gapped lower and it never actually even managed to climb up there. And we are currently forming an inside day exactly at 130. So I don't know, perhaps we had a false close above 130. We'll see. But for sure, and Euro Pound testifies to that. As you remember, we had this conversation with Blake at the beginning of previous week, and then he mentioned it again. It was Thursday or Friday, and you mentioned it today as well. Euro Pound shows that there is a good chance that cable is going to turn first. Yeah. And I need to reiterate here, I said it the previous week as well, that if I remember right, Euro Pound is the third more liquid currency, which means that when you get a move in Euro Pound, it will obviously affect pound crosses all over the place. So for sure, if you want to be long something, if you want to be long something against something you consider a weak currency, if you are to choose between euro and pound, at the moment there is no question with the breakout we had. Your choice should definitely be euro. And it's not only the euro pound that makes me say that. We have various events in euro pairs, and especially if you remember, I was keeping close track to USD CHF and a very long-term trend line last week. I don't know if you remember that.
Yeah. Yeah.
We had this
that, you mean the false breakout in Swiss?
Yeah, and then the turn lower that actually was about to test an ascending trend line that we have since 2011.
Mm-hmm. I just want to make one point. I remember last week Blake was talking about this divergence in euro, and he was right. We got a little sell-off here. Mm-hmm. But I said the reading was pretty high, you know, mid-70s, high 70s.
Yes.
At this high right here, I think we're just a shade over 70. So you could see that momentum is waning. Maybe you call it a 1, a 2, a 3. And this rising wedge, you could call it a throwover. And then back underneath this formation, you might have something for correction.
No, that might actually be the case. There's no question about it. But to be honest...
But I'd rather be short the weakness, which is cable.
Yes, there's no question about it. But on the other hand, I also want to mention that you remember we had this conversation and we actually exchanged opinions, and Greg ended up on Friday agreeing that probably the bullish euro scenario now in his counts is right. More likely than the one that the correction was about to be over. I also believe that you get a lot of signals out there, even from a macro perspective. I mean, Merkel talking about weak euro. There is a speculation that Weidmann from the Buba from the Bundesbank is being drafted as the replacement of Draghi, and we all know how hawkish the Bundesbank has been. It's by far the most hawkish.
Check out that Nikkei chart by Alexandros Fontis. Yes. Alex is a pro. He uses a lot of candlesticks and Japanese style clouds and everything. I always played.
But by the way, it's Ifandis.
Huh?
Alexandros Ifandis.
Fontis, not Fontis.
Ifandis.
Okay. Yeah. You guys know each other? Same country?
No, but he's Greek. I mean, I follow him. He's a real nice guy from what I've seen from Twitter, and he posts really interesting charts. But I can read his name, because it's Greek. That's why I'm telling you.
Yeah, he's one of the top guns from LAR. I have a crew, man. They follow me from town to town, and we go from town to town.
And they totally teach people.
And we draw our 6-shooter. We teach people how to be a Top Gun too. So anyway, here's Alex. Let's look at the Nikkei. It looks like it's a nice divergence, rising wedge, kind of negative. So
yeah, and actually
that must mean more downside in U.S. dollar again.
I'll tell you. I totally agree with his chart. And even if you take the horizontal line. It's what you said. We had a double top. You want me to take the screen?
Yeah, go ahead, bro.
Okay, because we have quite a lot of things we've talked about, and we can
see. The show must go
on the chart. Okay. First of all, since we talked about the FTSE 100.
Oh, and I want to ask the community. Anyone going to the expo in Cyprus this weekend? Anyone going?
Yeah, if you are, both stadiums
you look for Steve and Stelios wandering around aimlessly on the floor. Okay.
Wearing bathing suits and flip-flops.
coming in from the pool with the ForexAnalytix phone app. Dripping all over their Android. I don't know. Anyway,
participating on the webinar through the phone and yelling in the expo.
Sounds like fun, buddy.
Yeah, that would be fun for sure. By the way, yeah, this is the wedge I was monitoring. So this played out really nicely. I mean, look at it. We had a break, we had a retest, we had a second leg lower. So to be honest, this is the kind of structure. This is the kind of structure I would expect from US indices as well. I mean, at least, you know, one leg down, a retracement.
ABC, yeah.
Yeah, at least. I mean, at the very minimum.
That's what Greg agrees with you. He said that Friday when he showed the
Yes, yes. So at the very minimum, I would expect another leg lower. And now, you know, I'm monitoring again this wedge support. Perhaps it might provide some resistance again. But for sure, if you look at this structure, it's...
Hey, Steve, you know, I have my slippers on the wrong feet. You ever do that?
Yes, on occasion, I have to admit.
I better not trade today because I can't even put my slippers
I'm not
on
superstitious about that, no.
I'm dressed up for work wearing my slippers. All right, go ahead.
And by the way, this is the line in Nikkei. We also have to monitor at this line, which
you can
is...
share here, Martin. Go ahead.
We might currently be retesting the double top we had here. We had a smaller wedge also than the one Alexandros was showing, this one, which, you know, we double topped, we then had a sell-off, we then had this very big rally up here, and now we're retesting this level, which is very, very close to 19,000.
You look pretty vulnerable under that low. All the indexes that recovered Thursday are going to be in trouble under Wednesday's
Most
low.
probably, yes. I mean, it would be a big surprise for me. Not that it would be the first time I would have seen it. If we just, after this kind of a sell-off, we just completely ignore it and go ahead and break to new highs. With current stock market environment, you know, you can never say never, but...
No, it could go to 24.30. You're right.
Yeah, quite unlikely. And this is what I'm looking with cable, by the way, since we were talking about it.
Yeah.
So here we have an ascending channel, which we seem to be starting to struggle with. I mean, we've spent many days being close to its support. We had this 130 level, we closed above it. Today we are contemplating if we're going to do it again.
You know, I'd love to see this be an inside day, Steve.
Yes.
And then early in the session tomorrow, take out today's high, and then take out today's low, and then you got something. You know what I mean? I love inside days because they set up the potential for an outside day the day after.
I agree with you. Oh yes, definitely. Inside days, you know, many people play a very simple system with inside days. Of course, it's good to combine that with some bias that you have formulated through other things like your macro bias or you know, political events or whatever. But many people like to do the following: when they think that something is about to turn, for example, and some people even not, they wait for an inside day and they just put in place like OCO orders, like one cancels the other, to either buy a breakout of the high of the previous day or sell the low of the previous day.
I would only do that I would only do that if on the second move. See, what I'm saying on an inside day is the initial move outside the inside day.
It might be fake.
Not where I expect it to finish. You know, it's like they go for the stops above the high of the day,
and then turn it around.
Challenge the lows of the day, and then I end up with some type of bearish engulfing candle. Or bullish. It could start tomorrow, the pound could close near the low today and start off lower, and then take out today's high and make a move towards 30.60 or so. Yeah.
That might be the case. That's one of the reasons
for outside days.
That's one of the reasons I don't want to trade like intraday, you know, or whatever, because, you know, very often you get cleaned by the usual suspects. You know what I mean? You might have
I look for the initial move out of an inside day, the initial breakout or breakdown to be a fake out.
Yeah, and you know, they very often, as you said, they very often do those moves. I mean, for example, look at it. I'm not anymore involved with the USD CAD because they took out, you know, this high by a few pips, for example. So,
Yeah.
you know, the second part of my short got stopped.
Oh yeah, that's where Blake sold it on your. You provided liquidity for his position.
Yeah. I can't complain. It was a profitable trade, and to be honest,
Yeah.
I'm very seriously thinking to selling it again at a retest of this area. So if I see a move higher in USD CAD, a recovery, I want to see how it's going to react at a retest of the 135.80 to 136 area. And I might actually be a seller once again there. This way we also, by the way, covered USD CAD because a friend asked about it. So now we had a fast look at it. Now, oh yeah, the USD CHF, because we talked about it, but we didn't show it. Let's show it here. Okay, look at this. I wrote that in analysis as well. You know, we had this.
Yeah, every uptrend. Yeah.
Yes, we had this double top here. It temporarily broke above a descending triangle trend line we had, but it held the previous high. So that probably kept a lot of people from being trapped. At least it kept me, thankfully. And then we had a complete 180 degrees turn for the pair.
Yeah.
But what troubles me and what makes me be mostly looking to buy any weakness in Euro USD or to sell any strength in USD CHF is the fact that we took out this trend line. You see it?
It's kind of like a pitchfork.
Yes. Yes, you see it's parallel, it's three parallel lines that have provided plenty of time support and resistance, especially this blue one. If you see, it has acted plenty of times, even in the near past, you see, with this big triangle we had here, it was its support, etc. And, you know, we penetrated it, we sliced through like it wasn't even there. And the next line I have in mind for support, you know, is down here. Of course, that doesn't mean that we're going to go straight down there. We might make a move like this and down there, but I mean, in my book, this thing is broken. The USD Swissie, it's broken, and you know something.
I agree.
Just look at this.
It looks like it could form a big. At your support line might be like a triangle line.
Might be, but look at this. Does this look anything else than an impulsive move lower? Look at it.
No, it looks like a major failure.
Yeah, this is.
And it just started.
Yes, we're talking about very serious strength. We're talking about 400 pips, 400 pips of a move lower within 7-8 trading days.
Yeah,
and at a pair that is rather stable. I mean, this is not a you know, an Aussie cross rate or a Kiwi. This is not Euro Aussie or Pound Kiwi or whatever else. I mean, this is a rather stable pair. So, you know, for me, this is a big technical event.
Yeah, under 96, your red line.
Yeah, around here.
You know, if you go back further to your left, you have a descending triangle at that red line, and you measure it from the 103 high to the 96. Give you a 91.
Don't forget that we also have this trend line afterwards, huh?
Yeah.
This one.
Yeah. And if you extend one of your downtrend breakout lines, it'll be under 90.
For sure.
The one underneath. Yeah, that.
Yes. Yeah, many options. But anyhow,
so that's how the euro gets to 119.
Easily.
116, 119.
Easily. And you know something, one of the reasons I believe that to be the case is because I still see my stream since a long time ago. You remember that for various reasons, including shorter term
people trying to sell it.
Yes, exactly.
What a gift.
Exactly. Still people are trying to sell it, and let me have a look actually. If I can pull, let me see, let me remember where I have it. The latest DSI, I think that the DSI, yeah, here it is, let me see. The DSI for Euro is still okay. I mean, it's now reaching the levels of bullish. It's now reaching the level of 76 after having been in a move from 105 to 113. It isn't yet at the level that you say that the DSI is
extreme. It's still not 90 or higher.
Yeah, potentially it can reach 85 or whatever, but even you know, you need to remember that I'm not saying that we're going to move at a straight line. I do believe that soon, because as you mentioned, the DSI of dollar is currently at 5. And the all-time low is at 4, the all-time low we've ever seen in DSI, which means that I'm definitely expecting a move lower in the Euro USD, a corrective move at least. So when we get that, which is going to be rather soon, might be even this week, we will definitely have the DSI for Euro dropping again, because a lot of people that are completely unconvinced that the Euro can jump higher, they might have started getting worried about it now, but the first move lower they're going to see, they're going to be like, ah, I knew it. I knew it would turn lower, just overshot my target, you know what I mean?
Yeah.
So they'll start going in sell any rebound mode once again. I bet you they will.
Yeah, there's that entrenched parity crowd out there.
Yes, there are still a lot of people that believe in it, but you remember we talked about it a long time ago. I see slowly the signs both of a Eurozone rebound. We've had a lot of political risk being removed off the table. There is still one major element that is a worry, which is Italy, but that's not something that will probably worry the markets within the next 2-3 months. It's a thing that will come in surface again later this year. And you know how markets are. Sometimes they're very short-sighted on things like that. So
you also have a good palladium trade working off another $11 today.
Yes.
From when you sold it.
Yes, I mean that's why you have to be
silver
patient.
Got up to 17. Did you book it up there? You're scaling?
No.
Okay.
No, I haven't booked anything because look at this. Look at this. You remember that I told you that my first target was this ascending trend line. So if the next day of the test, I mean, first sign for me, we tested it and rebounded slightly on Thursday. I was like, okay, first test, small rebound, that's absolutely to be expected. Then the next day, we try to make a bigger rebound, and we fail without even testing this low. You remember I had talked about this low, that we might test this low, and ideally for me, it shouldn't go above 772, which is, the close of that day. We didn't even get up to there. And we closed once again on Friday on the trend line support. So at no point I was worried with this trade to book some profits. At no point. I mean, I saw nothing that worried me of a strong rebound. And look at it today. I mean, now the next target is probably around the 200 DMA at 730.
Nice trade, buddy.
Yeah, thank you. It's not rocket science.
You were patient waiting.
That's what I want to say. It's not rocket science. You need to be patient. And this is something I was monitoring. You remember I started talking about it when we started the webinars. And it's been what, 2.5 months since?
What, here?
Yeah.
Base? Month and a half. Feels like 2.5.
Oh, okay. Yeah.
We're gonna finish our second month next week.
Okay. Yeah. So you see.
It feels like 2.5 to you, huh? I thought you were having fun.
No, I definitely have fun, but time passes so slowly when you're working almost all day that you lose track of time. Actually, I only realize how fast time passes by watching my son grow up, nothing else actually.
Oh,
Everything
yeah.
else seems more or less the same.
Yeah. So Steve is saying, if you're not patient, you'll become a patient. Right? So, we don't want to become patients of need of, any kind of damage control. So, Tom Petty says the waiting's the hardest part. How did you get good at being patient?
By losing money.
Okay, I figured that was it. We all need to get
There
in the hammer.
There is a Greek ancient saying, I mean, from ancient Greeks, which goes like, this is ancient Greek, to this examartinu kandrosophu, which translates exactly to making the same mistake twice is not something wise men do. Obviously, that's an overestimation in the sense that as humans, usually if we're not talking about grave mistakes, we have to do the same mistakes more than once and more than twice. But the point is, the point of that saying is that it's good if you start learning from your mistakes and, you get wise by not repeating them. So, when I was seeing really nice setups and really nice trades bringing me money in my trading account, and losing that money because of trades that were executed from impatience, because I watered down my rules because I was looking at the screen and I was thinking like, yeah, but this can work as well, can't it? And then you feel an idiot because you have made money from being patient and waiting other things, and then you lose it very fast by being impatient and trying to do things that were not actually completely within your plans.
Yeah, so they were impulsive.
Yes, exactly. So,
okay, so it's eliminating impulse trading.
Completely. Yeah,
has
completely.
Really been the difference. Okay,
yes.
Everyone. So write that down. Eliminate impulse trading. If you haven't planned the trade, don't come in and go, well, yeah, I think it's going to do this, but you didn't plan it, but you notice it. And if you do that, go very light. So impulse trading, I've been a victim of it.
And I know that it's becoming boring to hear from everybody, the same mottos and the same lines over and over again. But I'll tell you the same thing you've probably heard from most people, and sometimes it's not an accident that you hear it again and again. You have to embrace your losses instead of being angry with them. The right mentality is understand why they happened. If they happened because, statistically speaking, this was one of the trades that wasn't meant to work for the plan you had in place, it's absolutely right. You shouldn't even think about it. I mean, if you executed your trade plan and it didn't work, it's something that you don't think about it at all. You shouldn't think about it at all. But if you believe that you had a losing trade because you didn't execute your trading plan, or because you made a mistake in how you planned it, then just learn from it, and finding 1,000 different ways that don't work will eventually lead you to finding the 2, 3, 4, 1 ways that work for you. There are people that have, I mean, personally I have 2, 3 different types of trades that I'm looking to take in the markets. Other people have only 1. Other people have 2. Other people have a bigger variety. But the important thing is to know which types of trades are the ones you've mastered and the ones that your results are statistically good enough to keep them in your trade book, let's say, in your way you treat the markets. That's it.
You're a natural teacher.
Yeah, if only I was a natural English speaking person as well, I would be able
I think your English
to transfer the knowledge better.
But you're a natural teacher. Some people don't have it. In fact, I could tell you have passion for it. So Interesting. Is Stelios here, or is he? Oh, I think he's one of his
I
kids.
am here.
Here.
Are you excited about your trip to the expo?
Yeah, if only Steve wasn't there, it would be brilliant.
Oh, yes.
No, very
Yeah.
excited. Yeah, it should be
Yeah.
fun.
So, are you bringing anything silver with you for good luck? Be a little
Just
keychain or something.
Just my position. That's all.
Okay. All right, buddy. So, I have noticed something, Stel. The silver-gold ratio, the last few days, silver's been acting better than gold. That's the first time in a while, don't you think?
I mean, usually, I know it's not the rule, but it usually leads the way for precious metals as a rule, as in general. So, I mean, my views about silver. People don't agree. Some people don't agree. Some people do. I still have my targets in place, and
Look at this, a potential double bottom, by the way.
Oh yeah.
Here.
So, I mean, there are going to be a lot of obstacles. There are a lot of things happening. There's a lot of uncertainty. But overall, I still really like the trade, and I have to remind everybody that this is the kind of trade I usually put on. I don't micromanage it. I never micromanage my trades. I look through the telescope, like you say. So I've already kept this trade for a couple of months now, and just running with it. And it's my fourth trade, my fourth long in 2 years. And the last three have done very well, although at points they're down a bit. I was down like 6% at some point on this particular one, but I still believe in it, and it might take its time, but I think it's going to get there. I really do.
I'm trying to get David Morgan to come on for an interview. You know him?
David Morgan.
Davey is a big silver expert. So I was trying to do that for you. I forgot the name of his report, but.
Thank you. I mean, I don't know him personally. I know of him, but I don't know him personally.
Yeah, I interviewed him once on FX Street, the Morgan report. Yeah. So sent him an invite. As you can see on Twitter, I'm not afraid to invite anybody. In fact, I was thinking of sending out one today. Mr. Trump, I'd like to interview you on Face. Best regards, Dale Pinkert. I almost got him for an interview when he was a candidate.
This is saying something interesting, that palladium supply is increasing too much. Demand is flat. His target is 685 in palladium and 580.
From his lips.
African mining strikes ended last year, so that's why production is being increased. And then he asked if we can see the text, and yes, Jess, we can see your text. Thank you very much. Also, a friend asked about EuroCAD, saying that COTs show that Euro has record long positions and CAD has record short, and if this is a good opportunity to see a retracement in EuroCAD, the answer is this leg higher, this move higher is quite mature. That would not surprise me. Obviously, we don't want to see 152.82 getting knocked out, but for the time being, as you see, we have no indication of a reversal yet. So
I have waning momentum. The only bearish view, you do have waning momentum, and you have a second drive.
We do, but I wouldn't be surprised to see one more high, perhaps to retest this peak here, which is no surprise there. This is the elections week high. Yes. Yes, exactly. Yeah. So I am monitoring. I'm going to let you know if I see a real reversal sign, and of course go ahead and mention it again if I forget to do so. We can see the same thing in most Euro crosses. I mean, we see that most of them are in a mature uptrend. I mean, sooner or later we should have some pullbacks, but as I said before, we don't have the signal that will tell us, yes, we know that this is the point that they're probably turning. Not yet. It should be soon, but we're not there yet. Euro
I'll be back in 5, Steve. Go ahead, bud.
Blake, are you here, by the way, mate?
Huh?
I'm asking Blake if he's here.
Oh,
Dale,
maybe,
do we have a guest today?
yes, we do. We have a very, and it's a guess for, trading FX should be about 10% of your portfolio. That's a pyramid, Shouldn't be, although I know that's all some people do. But I brought in a guy who, can give you some ideas of, how to diversify with your profits in FX into some things that are longer term that you don't have to watch every second. So he's a top-ranked performer in the equity market, Kurt Spano. He'll be with us in 15 minutes.
Very nice. Looking forward to hearing
And
this.
I'll be back in 5, my friend.
Okay, sure.
I think he's Greek, by the way. Second generation Greek, I think.
Okay.
He's coming in a Trojan horse.
He has a picture of Santorini in his profile, so he must be Greek.
Not necessarily. A lot of people like it, but yeah.
The Greek mafia will be with us.
Actually, I've never heard of a Greek mafia. This is definitely one of the things we're not doing right.
Oh, I'm sorry. Wrong island. That's a country shaped like a boot.
By the way, for the friend that is asking, saying baklava sounds good. Baklava is actually originated in Turkey. We have to give, credit to where credit is. Yes, of course, Greeks have been making it for centuries, but baklava is actually originated in Turkey.
There you go. You get FX stuff.
FX
you get,
and encyclopedic knowledge.
stuff.
Yeah.
Anything you want, we are here.
Let's have a look at DXY because
my specialist subject is 1980s music. So there you go.
Yeah. Okay. First of all, we're now retesting this low here, and obviously an obvious target for everybody is the low on the election days, which is at 95.89. Ronit says 112. Below this, it will be sharp sell-off. 97 DXY, that is. Yeah, we're currently at 97 in a sense. We've actually broken below it. And personally, if we don't stall here, I honestly don't see any other kind of support until 95.89. So perhaps we will make it to there. And below that, I have a target at 95.15. As you see, anyhow, this was, we had mentioned it back then, this retest of the broken channel was the last breath higher of the DXY before actually breaking lower. And since we've had this is the 6th down day within the past 7 days. So honestly, besides the fact that currently the sentiment has turned decisively bearish the dollar, which is something I don't like. I mean, for being short the dollar. If you ignore that, there is nothing in this chart that currently says, okay, I'm about to rebound. Nothing at all. Nothing at all. Let's have a look at oil. Ronit is mentioning oil. Yeah, listen, of course, since it's dollar denominated, of course, there we go. This is what I have in oil, by the way. We are reaching the confluence of two resistances here in oil, and thanks for mentioning it. First of all, of three resistances more or less. We have the 78.6 fib from this move lower at 51.50, let's call it roughly. We also have these previous peaks here and a couple of bottoms, no, 1, 2, 3 highs, one low here at this level. So I'm monitoring at this trend line, this horizontal zone in essence. And we have this steep ascending channel as well. So they all confluence around 51.50. And given the fact that we have rebounded from below 44 to above 51 within a couple of weeks, I think that this looks like a good area for somebody to look into I mean, even if
some
oil,
hedges out. Lay some hedges
yes,
out.
even if oil is to move higher in the medium term, at least you can expect something like that, for example, right? Why not? And this also goes nicely and gives an opportunity, as I mentioned before, for people to perhaps hope for a retest of 136 in USD CAD to resell. And if we also want to see at another correlated pair that I know makes Stelios a happy man, perhaps even a retest of this 840 zone and perhaps this huge trend line in USD NOK before to give you an opportunity to sell it again. We also have the 200 DMA here, so 840 is a very critical zone for USD NOK. Perhaps this will give you the opportunity to re-enter short there and look for another move towards the base of this huge range we have been following since the middle of 2015. It's almost 2 years that we have been in this range, with the exception of this breakout here, this 1 month breakout here. So why not? I mean, we also like the NOK long, so the USD NOK short from a fundamental perspective as well, so why not? Yeah. So now we covered oil and 2 correlated pairs with it. Is there something else you wanted? Okay, I see Ronit has posted the chart, let me show it. Let's see what he has. Yeah, okay. This internal trend line in Euro USD that we're currently retesting here. Okay, might as well turn lower from here, but I'm repeating again. For me, we didn't actually. We saw the USD CHF, which is almost inversely correlated, but we didn't see the Euro USD. But let's have a look at it. For me, this is not something I want to be selling into, the Euro USD. I don't mean that it's not going to correct lower, but I mean that I'm now in the process of finding a place to be long if I want to do anything, then a place to be short. So perhaps a retest of 110.20 here or 110.50. Depends on how high we go before we start correcting.
In the meantime, what I was talking about is perhaps the euro carries the pound into the one more push up in the pound. We get above that 50-30, that 30 level here, clean out some more stuff. So
why not? And by the way, let's have another look at euro pound, since we've seen it so many times. Yeah. Okay, I remind you that we believe that this is a very, very critical breakout. I also remind you that before we even tested this trend line, I showed that there is a potential of an inverted head and shoulders, and its target is at 87.33. So I really believe that the chances of testing that level are very high at the moment.
Well, at this time, yes, it is, because this everybody's positioned on the short side of the euro pound.
Oh, welcome, Blake. Nice to have you.
Thanks. I only have a few minutes this time in the morning, but I just wanted to say that there's a lot. It's everybody's positioned short, so this currency pair has could probably go a lot higher.
Yep, I'm totally with you.
Nicola Duke wasn't.
What's that?
Nicola Duke wasn't short.
Oh no, I was actually short that a couple weeks back, and no, she's been on the long side of it, and I'll tell you, it's a really significant breakout at this point, and you know, I'm playing it to the long side now. I mean, just because from a positioning standpoint, you're probably going to get a lot of people that are going to be chasing this one higher too.
So does this make you want to be more aggressive with cable shorts now?
I think you gotta. I think if you're long cable in any way, shape, or form, you really have to really be focused on this chart now.
And Blake,
because now the risks are that
yeah.
Blake, something else we can also mention, we don't have, of course, a DSI for the euro pound, but you can easily compose a synthetic DSI for the euro pound, because we have the DSI for the euro USD and we have the DSI for the pound USD. So if you look at them, the sentiment is roughly the same, which means that the sentiment for euro pound, the DSI for euro pound, if we had one, would be more or less neutral. So there is no obstacle from there as well.
Yeah, I mean the euro is a little bit more bullish sentiment than the pound.
Yes, but you know, it's not very significant. I mean, there's a difference.
No, it's not hugely different. That's correct. Yeah, so I think the euro pound, the bullishness of the pair is this is a big breakout. I mean, we cleared the 200-day moving average as well. Big fib level. You have that inverted head and shoulder pattern there, and it looks like it's going higher from here. So I think that that you have to keep that in mind when you're trading the cable. You know, being on the long side of the pound is a little dangerous with the euro pound moving the way it is. And I know we highlighted it in this week's video, in the week ahead video, and that was the one thing that I did when I got home yesterday from my trip is I got into the euro pound last night. So I bought it right as we opened yesterday. So
you go up north, Blake, to get out of the heat?
Yeah, I was up north, but it was a bachelor party for my soon to be brother-in-law. So there's a bunch of young guys out there. I was the older one in the bunch, and trying to keep up with these young guys is difficult. It really is.
You can't even try anymore.
I tried. You know, I gave it a valiant effort. I know it's a little tough.
So I really have a question. Did your sister force him to take her brother with him so she can be sure that no weird stuff are happening in the bachelor party?
No. He did want to. He wanted to take me. It was just, I mean, we're really good friends. So he's a great guy.
No, I'm kidding.
You'll feel better. You'll feel better by Wednesday, Blake.
I'm sure I will. Maybe even Thursday. So. But hey, I just wanted to pop in really quick, and I'm Dale. Do you have an interview today?
I do.
Oh, okay. I wanted to pop in. I will be more around the next couple of days with especially with Steven Stelios being in just with them traveling to the IFX Expo.
That's
in Cyprus. Yeah, that's correct.
And that was my idea for them to have a good time.
It was, and
good idea, huh, guys?
And I think
definitely
for them. Yeah, but I'll be around the next couple of days a little bit more, but just wanted to pop in and say
they're not. I don't think they're taking their wives because it's a business trip, right, guys?
Of course not. Are you crazy?
Yeah, I don't think that was going to happen. No way.
Yeah. All right, Blake.
All right, guys. Well, hey, have a great interview and a great Monday to everybody.
Yeah, you'll like this guy. It's what you could do with all your FX profits to diversify. So, Kirk, welcome to Space.
Sounds great.
I'm going to make you a presenter now. Looking forward to hearing your voice, seeing your screen, and thank you so much for taking time out of your day to address the FACE community.
All right, how are you doing there, Dale? I'm actually pulling up the screen right now.
Thank you so much, Kirk. How are you? Two of my partners are from Greece, and they're guessing you're second generation Greek.
No, my daughter dates a Greek guy, but no, I'm actually third generation Italian.
Oh, okay. See, the other island. Okay.
Yeah, right down the Mediterranean.
Okay. All right. So I saw what you emailed me.
Right.
And it looks like a great PowerPoint presentation. I'd like to start off with this. You know, our bailiwick is currency. And it's really speculative. And I was always taught, because I had a Series 7 for a while, that what you do with speculative capital is usually only about 10% of the pyramid, that you use leverage and you're aggressive and it's speculative. It's risk capital. So if it goes away, it doesn't hurt you. But the flip side of it is if you're doing well with your spec investments, that you can move profits from your spec investments to things that are lower on the pyramid, like equities, like mutual funds, like bonds. And I thought it'd be a great idea to educate people, FX fanatics, and I'm sure everyone here, their retirement money isn't all in trading. I'm sure they're in mutual funds and, you know, maybe they have pensions. So I thought it'd be great to have a guy like you, who's a top-ranked performer, address us. And you talked to me about a few of your styles. But first of all, how did you get into the business?
I was going to be a lawyer, and I decided that was too dirty, so I got into finance. There you go. There you go. You got the joke, right?
Yeah, so you don't have to take quite as many showers being in high finance, Kirk. But
right.
My mother was hoping I'd be a lawyer or a doctor. You know, most American parents hope that for their sons. So how did your family embrace your decision to go into finance?
My family's always pretty distracted, so you know it was all good. I do have an uncle who has you know, built a $1 billion firm. I'm on the other end of that scale. I like writing the investment letter, and I manage money for about 65 families, and I'm very happy just doing that. Okay,
so is it an RIA structure that you're managing people's money?
Right, fee only, RIA. Right. I actually gave up my Series 7 license back in 2010, so it's you know, yeah, no, at this point, you know, what's the point of being FINRA registered and paying all those fees and having the extra audits? You know, I'd rather.
Or how about this, Kirk? Or how about this? You know, if you had a commission-based client where they could trade for almost zero anywhere, but still want full service retail service from you.
Right. So I do a lot of consulting. I actually have much more money that I consult on than I actually manage. So the money I manage is, you know, middle-class folks who, you know, just don't have any experience with it. But I probably consult on, you know, well into the 9 figures. Okay.
So why don't you start moving through this presentation and tell us what you're telling them along with the presentation in this current environment of a market that is so Teflon that even special prosecutors only take it down for a day.
Right. So I guess I have a question. What can you see from my screen right now?
Intelligent and enterprising investors.
All right. So that's the screen you see?
I think the gist of it was tactical against something else from what I read earlier. Tactical. Right. And go ahead.
Right. So, you know, I focus on asset allocation with most folks just to make sure that they have some concept of what they're doing. You know, derived it from the Intelligent Investor, which, you know, is one of the Bibles of investing. Broke it down into an easy way to wrap your head around it. And, you know, for most folks, having an asset allocation approach is going to probably be what saves them from some of the big market crashes and gets them involved in some of the better parts of the market. So I go over that first just to give people a baseline. I know that your group is a lot more sophisticated, so I'm going to just very quickly breeze through that.
But some nice endorsements for you there, Kirk.
Yeah. No, this is what I'm showing here is Tip Ranks, which actually Elliot Spitzer is a partner in that company. So when you said special prosecutor, I thought you meant they were chasing me again. But
okay.
no,
Yeah. No, Elliot Spitzer chases other things.
right, there you go. See, I serve up softballs. So I've done this a few times. But, it's an interesting algorithm that they have. I didn't know it existed until about a year ago, but they've been tracking me since 2011, and apparently
Nice.
I'm all right at this.
Congratulations.
Yeah, these are two.
You sound like Sally Fields after she won the Oscar.
Yeah, right. Hey.
They really, really like me.
Yeah, right. They like me.
And that's a great return. I tell people that hedge fund managers do cartwheels, 25% annual returns, because a lot of people really get locked into some of the hype,
right?
3-digit returns in a year and so forth, and FX trading. They also blow up trying to do it, but nothing wrong with 25 when you take in compounding.
Right, and so this is 2-year rolling returns. So the problem with tip ranks or anything else that measures people online is that, I'm making recommendations to people who are managing money, and I don't publish an article for 2, 3, 4 weeks later, maybe a couple of months later after I've bought something. So you do have to take these numbers with a grain of salt. The reality is that my investors generally get in earlier than what I'm publishing, so their results are generally better. And so that's really an important concept. But I know that a lot of your people are swing traders, and yeah. I'm a position trader, but that has a lot to do with being an RIA, right? So because of the regulatory oversight, being a swing trader is tough. So I do the position trading for people, but I use a lot of the same techniques that you use, and we'll get to that in just a minute. So I'll breeze through the asset allocation part very quickly. Ultimately, we're looking for a margin of safety, right? Same thing that you're doing. You're looking for ways to stay on the safer side of being an investor or a trader, whichever way you're going there. And I think that most people need to really focus on this, because especially the young kids, the millennials, I'll tell you what, I've been in day trading rooms with them, I've been in swing trading services with them, and they're ruthless traders. They are. They want to make money. But I think that they put too much at risk a lot of times, and I think a lot of it is because we've been in a bull market. I don't think they understand what a down market is. I don't think they understand that market structure is in such a way right now that it's not a big deal for us to have a flash crash, and it might not be like August 24th, 2015, where the market dropped 9.9% in 20 minutes and then rallied almost all the way back within 2 weeks. We might get a situation at some point where the market drops 9.9% one day, traders push it back a little, and then it goes 9.9% down the next day. And the reason I say 9.9% is because, as you know, the way the circuit breakers and whatnot work, awfully tough to have more than a 10% down day, but that doesn't mean that we couldn't have several in a very short period of time. And
what makes you say that about the structure, that you think it's, a possibility? You mentioned market structure.
Right.
I've heard people talk about it. Is it liquidity issues that everyone's on one side of the door? The banks are not, we're most likely not going to have a systemic risk from the banks because they've deleveraged. But could margin debt be a reason why you're talking about this? I think margin debt at multi-decade record highs.
Right, so margin debt's an indicator, right? That tells us that there's people who are stretched out. But when I talk about structure, I'm really talking about the way that money gets into and out of the market at this point. And right now, because of the, pardon?
Passively through ETFs?
Absolutely, that's exactly where I was going with that. The indexing approach that people have taken with huge sums of money, and the way that investment advisors move money using some of the overlay or third-party asset managers is dangerous. and they don't realize it. The investors don't realize it. The investment advisors don't realize it. And when there's a shock, they're not going to be ready for it. And they're just going to throw in the towel and say, well, the market went down and that's just what happens. So, you know, you have to be aware of that. And there's warning signals. There's warning signals to 2008. I was basically out of the market before the big crash in 2008. I was giving seminars telling people to sell real estate and stocks and getting laughed at as they eat the steak I bought them. But,
Are you seeing any now?
I don't think we're at risk of the big one. I think the big one is several years down the road, to be honest with you. However, I do think that's good news, right? But I'm projecting basically a double dip recession over the next 3, 4, 5 years. And I think the first one will be shallow. I think that'll just be a bit of reversion to the mean. It'll be letting some air out of the bubble. And then you're going to see it really get pumped up once we do tax breaks and do a little infrastructure spending and start pulling growth from the future forward. And when you pull growth from the future forward, which is politicians are apt to do, you leave a hole in the future. So I think in the short run, right? You always leave a hole in the future if you pull tomorrow's growth to today. And that's what President Trump and the Congress are talking about, in my opinion. And I know this, you know, I know I'm supposed to stay away from politics in most discussions, but in my opinion, if they copy the policies of the early 2000s, we'll just get a repeat. I mean, why wouldn't we? So, you know, that's really what I'm concerned about. But I think that in the shorter run, if we get some of those event-driven corrections, we really ought to be thinking as investors that want to buy those dips. So, you know, getting back into the asset allocation, I have it broken up in the same two categories that Benjamin Graham did. You know, intelligent investors, a little bit more conservative. Then you have your enterprising investors, which I think are your group. And very simple ways of doing asset allocation. Pretty much always have a quarter in equities, another quarter in either alternatives or equities. Then half the portfolio is moving around based on market characteristics. And think about this as if you weren't sophisticated. If you were the 90% of people out there who are just putting their money in because they know long term that's what they're supposed to do somehow, this is a good guideline for them. And if they simply do one little thing, they keep their core equities. This is an intelligent investor would have the fixed income. You start getting tactical, and you just ebb and flow back and forth between heavier in equities and lighter in equities, depending on where the market is. I think that the average investor, actually I just found a typo in here, I think that the average investor really ought to be close to 75% in equities right now. You know, the more conservative retired person, maybe 50-50 portfolio, give or take, just because having the short-term fixed income or the alternatives and the cash at the moment probably makes some sense going into the cyclically slow period of the year. But really, without many bad economic things on the horizon short term, you know, you do want to err on the side of being invested. So it becomes a matter of where do you look, right? So if you're looking for investments, you know, totally I breezed through the asset allocation quick. I don't know if there's any questions. If there is, throw them at me. I can't see what you're seeing.
I'm looking, yeah. I'm looking. Nothing yet. Go ahead.
Okay. So what that really moves me into is this core four investing. And here's what's super important for the swing trader. I know that you're using quantitative measures and technical measures. I do too. However, when I do a trade, whether it's something I expect over the next several months, because I will trade options, I was trained by a guy that helped write the Series 7 test on options back in the 1970s. I've had a good mentor. And so I will do some swing trades on positions that I'm intimate with. The most recent one that I've been in, and I've actually been in this company for 9 years now, is Exact Sciences. I bought it when it was about $3 back in 2007, end of 2007. Quadrupled down on it when it got down to $1.65. It actually went under $1 for a while, and I've been riding it all the way up to $30 and trading the options around my core position for 8 years now. And because I understand the company very well, and I have the ability to use quant analysis to figure out price trends, and I'm really most interested in cash flow.
So you've been selling calls against it at times for income?
I've only done it one time in the last 4 years have I sold calls.
Okay.
What I normally am doing is I'm selling puts and doing a synthetic long. So I sell the puts because you look at that chart, and with one exception, it's been very constructive. And that was a freak regulatory.
Can you scroll down so we can see that chart? Scroll down.
I don't have that chart in
this. You don't have it? Okay.
No, but you can pull it up anywhere you want to pull it up. The symbol is EXAS. Pull up the last decade, and you'll see, with the exception of one big dip about a year and a half ago, which was driven by a regulatory ambiguity. It wasn't even a bad decision. It was just somebody wrote something that nobody understood. I've done very well. But what I will do...
Preference of biotech, Roderick's asking a preference to biotech over just tech, internet companies, internet security.
No, actually what I'm known for is as an analyst in the energy sector from MarketWatch.
Okay, so then that goes to another one of Broderick's questions. How do you view oil service companies going forward?
Okay,
like Halliburton and McDermott.
All right, so I'm not a fan of Halliburton on the fundamental side. That failed merger with Baker Hughes is going to be damaging to them for a while. That doesn't mean it can't trade up. I'm just saying that the fundamentals aren't behind it really drive the stock. In that field, oil services, love Baker Hughes. They got that big payout, and their business and their technology are just outstanding. And then Schlumberger too, but Baker Hughes is my favorite. I'm actually writing an article. I'll finish it today, and I'll have it up on Seeking Alpha tomorrow. My clients already know about it, and the fundamental trend subscribers already know about it. XES, just the Spider Oil and Gas Services and Equipment ETF. That is a pretty cool ETF. It's more even weighted, so you're not overweighted to the big three, Schlumberger, Halliburton, and Baker Hughes. You have a more even spread across market cap, and I think that's important with oil and gas services, because one way or another, you're going to see oil and gas services just do very well in the United States. It doesn't even matter if oil prices stay the same. Now, I think oil prices are going much higher in the next 2-3 years, and I have an article out there with 5 reasons why. But the oil and gas services, you can point to Trump wanting to push the industry. You can point to the fact that $1 trillion of deep water and oil sands projects have been canceled. So the companies that are intimate with the shale industry are going to do really well, even if the E&Ps stagnate. So there is a pretty big reason to see oil and gas services go up.
Were all those projects capped because of what happened last year and a half ago, and they're not coming back? Or is this a recent development?
No, that's from the last couple of years. So
okay.
There's over $1 trillion of deep water and oil sands projects canceled through 2022.
Okay.
And now that the market is basically balanced, the market is pretty much in balance. Oil supply and demand are about equal.
You can tell by the chart, the defined $10, $12, $15 range all year.
Right.
What's your view on the fact of the Saudi Aramco IPO? Do you believe that the powers that be will keep, and you're constructive on oil prices anyway, But do you think that's a factor in keeping them elevated until this IPO is launched?
I think that there is a wild card that everybody's ignoring that's going to make Saudi Aramco one of the absolute best investments you can trade. I think, and I was a geopolitical analyst in another life. I'll tell you what, the odds of there not being a greater conflict with Iran in the next 2-3 years is remote. And I don't want to play up the opportunity in war. However, the reality is that we're going to probably see a war with Iran. Nobody trusts them. If you're paying attention to the news, you see that there is a really weird alliances formed between Saudi Arabia, the Gulf Cooperative Nations, Israel, and the United States. And then you just saw, what, a $110 billion arms deal, which is a precursor to $350 billion. Saudi Arabia is not messing around.
I mean, there already are, like Yemen, proxy wars going on between Saudi Arabia and Iran.
Absolutely, and absolutely, and you have Iranian military in Syria and Iraq. So
that's true.
I think it's very possible that you see oil prices drift up to $70, $80 a barrel in the next couple of years just on the supply and demand imbalance going away. But ultimately, I think there's conflict, and there's a structure to the conflict that I think is good for us, and I think there's a structure to the conflict that's bad. Either way, oil prices probably have one more big bull market, and I have in market watch
140 above the 140 super spike.
In that direction, hard to know, right?
All right.
But
interesting.
But I have called, I called the shale boom. That's what got me the gig at MarketWatch. In June of 2014, I told everybody when oil was 120, it was going down to 80, and it might crash below that. And I talked about how enterprising investors would have some pretty neat leverage opportunities if that happened. By July, I was telling people to sell oil stocks. I shorted the oil stocks right before Thanksgiving of 2014, made a bunch of money in that fourth quarter. I actually shorted oil stocks and the euro. And so 2014 was a home run.
Do currencies, or particularly the linchpin dollar, ever play a role in the way you view markets?
Yes. So the dollar, again, back on MarketWatch, when everybody was talking about the collapse of the dollar, I was telling everybody there was going to be a huge bull market on the dollar. Just Google my name, dollar, bull market, and you'll find those articles over on MarketWatch. There's a link on fundamental trends to all my articles on MarketWatch. But
what are you thinking now, Kurt? I mean, it's been under pretty good pressure here, challenging, breaking down from some uptrends. You think this is a secular or cyclical event in the dollar to the downside?
No.
Trump wants it.
Yeah, and he's not going to get it because the rest of the world will just be weaker. There are natural, economic, geographic, geopolitical, military, there's just economic, there's just so many factors that make the dollar the strongest currency in the world, no matter what, that, we beat it down as a matter of course to keep it from getting too strong.
Too strong.
Oh, yeah, sure. There's no reason.
That would be deflationary, and that would be more difficult to service.
Absolutely. There is no reason, none, because everybody else's debt is bad too, and they have less ability to pay it. There is no reason why the dollar isn't much, much stronger than the euro, the yen, the renminbi. It doesn't matter. There's no nation on earth, and Buffett talks about this all the time, that has the economic, geopolitical, and everything else strength that the United States has. So we print money, and borrow money. Why? It's because we know if we don't, the dollar will get so strong that it'll be a major problem. So, can we see the dollar drift down now for a while? Absolutely. But as soon as there's any type of turmoil, what's going to happen? People are going to flee to the dollar. You know, I've been struggling. You know, I know Kyle Bass thinks that the yen is going to collapse and Japan's going to collapse. I agree with him. I just don't know when. You know, and you don't want to root against the Japanese because, let's face it, they're some of the most honorable people on the planet. You know, at least, you know, post World War II. You know, they try to take care of each other. They work their asses off, but they just have such bad demographics, and that's, you know, my thoughts on core 4 investing. That's why I stopped here. You know, these major secular trends of aging demographics, global debt, technological change, climate change, sustainability, a move towards a multipolar geopolitical world, those are the 6 major trends that I'm watching. And the aging demographics impacts everything else. You know,
so are you, you know, I used to interview Harry Dent. That was his main thesis.
Right.
For a bear market was the demographic trends several years ago. Have the millennials trumped that demographic theory that Dent had a few years ago? That maybe they were a bigger force than a lot of demographers thought?
No, I think everybody knew that, you know, because I read Neil Howe and Harry Dent. I've met both of them. You know, Neil Howe's book, The Fourth Turning. If you haven't read it, I mean, read The Fourth Turning, or at least go to the website fourthturning.com, I think it is, and skim what he's talking about. And he's a pretty bright guy, and you know, the millennials are basically our counterweights to the baby boomers getting older, right? You know, I'm an Xer, I'm in the middle, and you know, so for me, I cater to both sides. You know, I'm in what's called a facilitator generation, and the millennials are going to offset a lot of what the boomers are dragging, a lot of the boomers are dragging us down. I mean, there's horrible statistics out there about what the boomers have saved for retirement. And, you know, so that's going to create huge social costs. But I'll tell you, the millennials are pretty bright. I have 2 children who are millennials, you know, younger millennials. And I've been in the trading rooms with a lot of them. They're generally ethical. We're not FCC regulated here, right? I can say bullshit.
Yeah.
The millennials have fantastic bullshit detectors, and they are willing to be a little bit Machiavellian. And you know, when it comes time for them to find a way to survive, they're just going to charge the baby boomers more money to help take care of them, and that's the way it's going to be. They're not going to wait for an inheritance that, you know, that the government and the nursing homes get. They're going to say, hey, you need help with this? I'll help you. This is what it's going to cost. And they're doing it in the trading markets. Yeah, they're doing it in the trading markets. Oh, yeah.
Yeah. Like, I mean, Uber, and then there's people that have, you know, they'll pick up your groceries, they'll do this, they'll come and hold your hand for an hour and talk to you. So, yeah, thank God for those people.
And you must have younger.
And I hope they have the, Kirk, I hope they have the money to pay them.
Right, absolutely. Let me ask you a question here real quick. You must have some traders who are younger who you can describe as ruthless.
I can describe it as aggressive.
Okay, there you go. I mean, they go in there and they kill it. So to all the younger folks out there, you know, just first of all, I'm a good guy. Leave me alone. But second, you know, I tell people this all the time. I do preach a little bit of the ethics. When you make your money, try not to hurt anybody doing it. But second, spend it well. Spend it on helping the world.
Enjoy and give.
Absolutely.
Don't just charge. So you're going to have to teach the millennials how to give because they're into receiving. I just have one more question. Those are your kids, but I could tell from you that you're a giver. Jess wants to know, as far as an infrastructure play, Kinder Morgan, or do you like defense companies? We've actually, for an FX room, gotten a lot of interest in what you've had to say. And I have to say that it's been a great interview because we didn't stick to script. And we had a discussion about, what's really going on. But I could tell there's interest in here. So what I'd like you to do is show people the best way to contact you, to keep in touch and, perhaps talk to you or receive your letter or follow your blog.
Right.
Why don't you show what you have and where people can go to keep in touch with you, Kirk?
So the easiest thing to do is just go to my website, fundamentaltrends.com. There's a special on it right now if you want to subscribe. It's normally $199 the first year, $399 renewing. But if you go to my Twitter page, where is Twitter? If you go to my Twitter page and follow it, I have a code at the top, and it's Forever 120 off. Gets you $120 off every year, including on renewals. So the first year is only $79. And then the reason that's important is in the chat room over at Fundamental Trends. Let's see if I can pull it up for you real quick.
So, and Kirk's Twitter handle is just like his name, @KirkSpano.
Yeah, at Kirk Spano. I have a forum, and I talk to the investors all the time. So, talk about the articles, all kinds of random house stuff. A lot of this you can look at for free. I mean, the research you can't see for free. The Ask Me Anything section, if you're a subscriber, you can ask me whatever you feel like, and usually within a day or so I'll answer. Somebody actually asked me about asset allocation the other day, and I said, well, actually my core is what I have in cash. All my circumstantial holdings are what I have active right now. So the 25% that I would normally have thrown at QQQ, dividend achievers, mid cap and small cap, I don't have anything in the indexes right now. So I'm picking out stocks, I'm picking out ETFs like XES, and that's the sort of thing we talk about here. So if you want to get a hold of me, drop the $79 the first year. If you don't like it, fire me after a year. But I think you'll probably, get something out of it. I'd love to come back and talk more about this because I think some of the questions about the industries are important because I know that that's where the trades are. I do a lot of 3 and 6 month trading using options. Like I told you, I'll sell a put on something I like because if I own it later, that's fine. And then I use the premium to buy calls. So I do a lot of synthetic longs.
Risk reversals.
Yeah, I do a lot of synthetic longs on, trend reversal, whatever you want to call it.
Yeah.
And that is where I have made some huge money. I mean, I've had 2 trades in the last year that were up darn near 1,000%. And, you turn 5% of a portfolio into 50%, it's a big deal. So,
are you looking for an uncle?
Yeah, right. I tell you what, hey, you had a question, right? Somebody said infrastructure and so Kinder Morgan, good company, not a great company anymore. There's long-term problems with the pipeline industry. They might get a boost right now, but long-term, you're looking for an exit strategy, even if you want to be long on the short term. And then what was the other company? It was MLPs.
Or do you like defense companies like Lockheed?
I was in those about 2 years ago, and I ran them up. I got out a little bit too early because they've gotten obnoxiously expensive. So can you trade them to the upside? Sure, but you better be nimble because, you have to understand reversion to the mean. There's just no way that they can stay this overvalued for forever. Now, we know that things can stay irrational a long time, right? So if you've got a great price trend and you know how to read it and you're not married to it, you can trade anything right in either direction. But, longer term, I do think that the big trends go back to these things here. Invest around these big trends if you want to be longer term. And you'll generally make great money. And the nice thing about it, and this is where swing traders get in trouble in my opinion, is they get married to a swing trading idea. They don't look at the fundamentals at all. And when something goes bad, it's bad, right? So at least with something that you also have the fundamentals in your favor, if you trade in this arena where the fundamentals are in your favor, your trade will generally fix itself if you just want to hold on. You know, it might take a year or two, but it'll generally fix itself.
Well, thank you so much, buddy, for your time today and your presentation and talking about markets and individual equities and balanced funds and being opportunistic. So it was a great interview. You said you'd like to come back. It's a deal.
That'd be great.
We'll set that up. Jess is saying that he's going to subscribe and he's trying to find the 120 discount coupon. So you got some business out of it. We're glad for you. You know, Kirk, people ask, why do I interview people that have services that could compete with us? You know why? Because my mission is to build up and edify traders every day. And here at ForexAnalytix, we believe in abundance, not scarcity. So if people find someone they're interested in, God bless them, let them go and sign up with someone who's contributed their knowledge and addressed our community. So thanks again.
Thank you. And
maybe sometime during the summer, we could get back together and see how things have played out.
Right, and I just want to say I completely agree with you about helping folks out. I talk to a lot of trading groups. I've been in swing trading and day trading groups, and I've been watching yours for a while. You know, I think that people need to get that education that you're offering.
Well, thanks. I appreciate that. That's our mission, and I think we've helped a lot of people, as I'm sure you have too, Kirk. So I will now call you my tactical trading warrior brother, and you know, have a great Memorial Day holiday, and let's touch base after the solstice and see where we're at in July or August. Okay, Kirk?
Sounds wonderful. You take care.
All right. Thank you, Kirk. I'm glad I reached out to you on Twitter.
Yeah, likewise.
Okay, buddy.
Take care.
Good hunting.
Yep.
Okay, everybody. So that's Kirk Spano. You have his contact information. Up, he's starting to roll over a little bit. We did get a spike up here in the pound above 40. That may have been it. I don't know if you guys are seeing my screen or not. Are you? There it is. See this spike right here? So I thought we might go to 60. They didn't completely clean out the stops over here, but that's kind of a negative candle. So not a bad area to maybe have a partial on. And I hope everyone enjoyed. Okay. All right. Thank you, everyone. Have a great afternoon. Tomorrow I have a longtime friend of mine who's a great analyst. Jim Walsh will be with us. Good hunting the rest of the day. And I'll see everyone for Turnaround Tuesday. Thank you, Steve Volge, Stelios, and thank you, Blake, and thank you, Face Community, for your participation and sharing some looks with us today. Adios.